family businesses, and venture capital.
So good afternoon, Maha Alfahim. Thank you very much for accepting the invite to have a discussion today about venture investing for family offices. I truly appreciate. I know it's very hard for a working mother and a portfolio manager in a substantial agency and a substantial family to actually carve out some time to educate the public about both family offices and your specific family office, as well as venture investing. So again, Maha, I truly appreciate your time here.
Well, thank you very much, and really, truly, the pleasure is all ours.
So, if you recall, we have discussed a probable flow for the Zoom call today. Let's talk about your family office for a few minutes and yourself. I appreciate an introduction there. I'll follow it with just a few numbers and stats about family offices and venture investing. And at the end, I'd love to hear from you about what are you doing in this field. So I do know that you are working on an interesting proposition with high waters. I would love to then hear about that, if you don't mind. So if it's okay with you, let's start with who is Maha Alfahim and the family office, please.
That sounds great, Doctor. Very brief intro on myself. I've joined Abu Dhabi Investment Authority about 9 years ago, and since then, my role there is that of a macro strategist. And what that entails is looking at market themes or market trends that would impact portfolios, specifically our portfolios, for the next 1 year, 5 year, and 10 years. Essentially, it's my job is all about looking into the future and trying to advise my colleagues on what is trend and what is noise, which is essentially really the core of being a venture capitalist. Even though our macroeconomic work there applies to all asset classes.
A true economist, as I always call you, a true economist.
And it's also, you know this more than me, but sometimes in this region, you're born into a job, and the job I was born into is the family office. I have never been involved maybe in the operating businesses, but have always the advice and more of the strategic and tactical asset allocation of the financial portfolios. 7 years ago, it made a lot of sense for us to increase our exposure from what was maybe 1% of exposure to venture capital to around, our target was 10% then to venture capital. And spoke to the family, made the case, and convinced them. And the problem was we couldn't find the right talent to lead our VC arm. So I had to do it myself, so for 7 years now, I've been leading our VC arm within the family office.
I would say the right woman for the job, knowing you and how meticulous are you. And I had the opportunity to actually speak in a panel once with your father, so I do know that he's in safe hands when it comes to business strategies, definitely. So
and you must know how tough my job is.
Yes.
Since you know who my boss is.
Yes. Kindly send him my regards. To jump on to what is this high water thing that I keep hearing about? I do remember going through the IM. It was a very interesting story. I'd like to understand from you, as if you don't have a million things on your plate, but what are you thinking of there and why are you doing it?
As I mentioned, going back to the 1% number, the 1% number was there because, one, our operating businesses were quite exposed to the region. About 10 years ago, our assessment of the ecosystem in the region didn't warrant a higher number in the very early stage, right? So we had kind of the intention, but we didn't see that, the asset class could offer us or add to our portfolio diversification as well as return targets at the same time.
Does he still put the 10%, 12% target number on you?
Yeah, it's less. It's more,
okay.
more 6 to
You're
8.
a lucky one then. You're a lucky one.
It's more 6 to 8 overall.
Give me your father.
So so we were underweight the region. Now in hindsight, maybe we were too complacent about the region. Things really turned around like, let's say, 4 years ago. So we should have entered the region more. But what we did instead, in order to match more of the global benchmarks or best practice for asset management, and we looked at, for example, the Yale Endowment. The Yale Endowment over the years have increased their VC allocation is around 20. Now they make up at least 20% of the portfolio. And as family offices, we really should think of ourselves, even though we're nowhere the size of Yale Endowment, but given our investment horizon, it's more long term, our asset allocation we should more or less look like Yale's. So we thought, okay, 10% could be fair because we also have limited capacity and expertise to maybe grow it to the 20% number back then. That took a lot of learning. That took a lot of really hard work to try to learn the industry, discover the markets that we're passionate about, to discover right partners, the right funds to be invested with. So when you ask me about high water is simply a platform, right? It's called High Water Venture Capital Fund, but how I like to see it is like it's really a platform that we can engage our peers, other family offices, to go through our journey without taking 7 years. We can really shorten that amount massively. We're happy to share our learnings in it, in building a VC arm for family offices. We're happy to share and involve them in our investment process. So we are set up as a fund, but we see ourselves as a kind of a family office fund for other family offices, because for us it's not just the typical GP-LP relationship, but we really see our peers as partners. Now, this goes to your question of why VC for family office? Why even bother, right? You can argue all day about portfolio optimization and diversification and whatnot, but essentially, what's really in it for us? And I think VC today, and your numbers show that, right? Is really well suited for family offices, because family offices are interested in returns, but they're also interested in what I like to call very casually the return plus model. If yes, we like VC returns, but we are also investing in early stage companies for other benefits, or what I could call like positive externalities. One would be just the learning. VC really offers you an opportunity to get your team, to get down and get their hands really dirty with understanding different industries, and not just any industries, but the industries that are disrupting our world today. So there's kind of more of the learning benefit. Second is we are family offices because we have operating businesses. More often than not, our operating businesses span geographies and industries. So we offer to VCs and startups, especially tech startups, a lot of strategic benefit with potentially onboarding startups with our operating companies, becoming their first client. So we're really more than money for startups. Then, that's in addition to being patient capital. Third would be also kind of related to learning, but we see, and a lot of our peers really see it this way, to take early exposure to inform, our larger private equity checks in later stages. There are more. I bet your statistics show that there are more family offices that engage in growth companies versus VC, and that makes sense given the risk profiles of most family offices. But we think actively investing in companies at an early stage would really help us become better informed investors for later stage companies, allow us to grow with the company. And doctor, if I may add, it is also important to be reasonable and a bit measured about entering the VC field, because after all, it's like all other investments. It's not without risk. It's very important to, again, really partner with the right people, because essentially, if you want to make money on very early stage deals, if you just go back to the basics, why would the startup succeed? And there are many factors, but one very important factor is that the startups that succeed are the ones that continue to be well endowed, that ones that will not run out of cash.
Yes, and a long horizon. The way I see them, they are more 9, 12 years, I call them.
Yeah, and essentially what that means is that in the beginning, it is probably better to co-invest or invest in funds that can really be long-term partners with the startup, and you can see that very clearly in just looking at statistics on VC returns in the US, right? VC is riskier than investing in equities and bonds over time if you are in mid-tier funds or below mid-tier, right? If you are in the top 25 percentile of funds, then your risk-adjusted, reward actually supersedes the more, liquid asset classes. So, you want to do it? Make sure you do it right. You make sure you do it with the right partners, and make sure you have a thesis, a top-down thesis, and your thesis can be related to your industry, right? Every family office is also an expert in some industry. And of course that won't offer you a lot of diversification if you continue to invest within, but it is also okay to have some exposure to your own industry to be complementary with your existing portfolio companies, and then engage partners that are more experts in the other fields to be exposed to the industries that are different from yours.
I do know that I can spend another 3 hours having discussions with you. As usual, I would take more of your time. I want to have a discussion with you, if you don't mind, on venture studios at some stage. I know that you're working on something there in Abu Dhabi, or being somehow associated. I think we'll have to keep that for another session, because I believe we are trying to keep these sessions short and sweet for our listeners. I would hunt for some of your time soon enough, and definitely share the wealth of your knowledge with the audience. So I'd like to thank you so much. And if you have just a last word or a last sentence that you'd like to share with the audience, the floor is yours.
Thank you, Doctor, for your time. Again, I'm really happy to engage, because every session I learn more from you than you learn from me. So this is the exact type of sessions that I'd love to repeat. Message to the audience is to really engage with your platform. We'll be able to create a lot of value if we collaborate more, and you're offering us a venue to do that, Doctor.
Thank you very much. I appreciate it, Maha. Truly a statement that I'm very proud of, and I'm very proud of you, to tell you the truth, individually, to see where you're a fantastic representation of the community per se, and what you are doing should add a lot of value to all communities within the region. Thank you so much, Maha. Appreciate it.
Have a good one, Doctor.
Thank you. Bye. Take care.